The S&P 500 is off to a great start in February, up 2.3% after having a rocky end to January. If you recall, the last week of January is when Nvidia dropped 17% due to the DeepSeek news, at least the DeepSeek overreaction that came out during the last week of January. So in this video, I want to give you what are the top stocks that I'm looking at right now, the top trades that I'm looking at right now for February 2025. And give you a little bit of an update on some of the previous picks and previous plays that I gave you here publicly. So we're going to first start off with that and then get into the top stocks for February 2025. Let's get right into it. So my view for 2025 hasn't really changed. It's going to be rocky 2025 for a number of factors. Obviously, you have things that are on the surface like geopolitical tensions, new administration, but it's not really that stuff. It's really the story as it relates to yields and the story as it relates to rates, as well as the friction between the Fed and the White House. Now, surprisingly, the last time that the Fed did the FOMC meeting, which was the end of January, Donald Trump was publicly saying that the Fed should lower rates. Now, they obviously didn't lower rates and they kept rates steady. And then later on, Donald Trump said, I think that was the right decision. So it looks like there's a little bit of an easing there. However, it's, not comforting that 3 Mondays in a row, the VIX has basically shot up. So January 13th on Monday, the VIX shot up to 22. On January 27th, the VIX shot up to 23 almost. And then Monday, February 3rd, the VIX shot up to 21 almost. Is this going to be a trend? Should we just buy the VIX for Mondays? No, I'm just kidding. But obviously, this is some really volatile price action compared to the last few years. So right now, I'm not making any broad changes in terms of my market outlook. I do think obviously that it will be volatile. I'm going to be watching the data, basically wanting to see if unemployment is going up. The GDP estimates that came in last week were much lower than expected. And obviously we have the yield curves uninverted and the 10-year going haywire, although it has dropped quite a bit. So I don't really have a broad market decision here, right? Except for watch out for volatility, hedge in some cases, etc., but not really looking yet to sell everything that I have. All right, let's get into some of the plays that I gave you previously. Some of these went absolutely crazy. If you're familiar with the channel, you guys know that we got into Costco calls here, and I told you that I was bullish on Costco and bought Costco shares, and that my target was $1,000 per share. Costco absolutely ripped it. This was our biggest money maker this year. Costco is now $1,050 per share. I'm out of those calls. I still have my shares. And if you take a look at Costco over the long term, this is an absolute beast of a stock, actually better than the S&P 500 if you look at decades even. So I wasn't a big owner of Costco before, but after this drop and where it was technically, I picked up some shares. Obviously looking at its fundamentals as well. And I will continue to dollar cost average in Costco from here on out. But right now we are making a killing on this stock. All right, if we take a look at Tesla, Tesla is one that maybe you guys might have surprised to know that when I said last video that I was actually looking at a Tesla short. Now, the reason that I was looking at a Tesla short back then was because of this trend line here and us bumping up against it. But more importantly, that also being the previous all-time high, as you can see here. This previous all-time high coincided with us bumping up against, let me just remove this, with us bumping up against this. So we came up against the previous all-time high and this trend line. This to me was bearish and we were not able to pop above. So I ended up shorting Tesla there. I shorted it for the day. I did it on the live stream, on the YouTube live stream, but ended up netting 134% on that short. And then I had longer dated puts, the 405 puts that I closed for 77%. Now, I am going to talk about Tesla here in a second because I'm no longer short. And this was the level, if you guys were paying attention, this 360-ish level was the level that I was looking at potential longs on Tesla. So I'm going to get into that when I talk about the stocks. I just want to give you a few more updates. AMD, I told you I was not bullish on AMD as long as AMD was in, was in this trend line here since October 2024. And the last time that I did the video updating you guys on my stock picks, we were coming up against this trend line. So since then, we've had earnings and AMD has fallen all the way down to 106. Now, there is a potential play here that I'm looking at. I didn't short it. I didn't long it just yet. But there is a potential play that I'm looking at here, which I'll get into. But as I said, I'm not bullish on AMD unless we break above this trend line and above the recent lower high breaking structure. Uber, this is one that, wow, I mean, after earnings, it dropped 7%. And today, as of the time of this recording, up almost 9%. Now, Uber absolutely killed earnings, okay? Best earnings ever. Gross bookings were up 21% year over year. Now, if you look at their revenue, 20% up year over year. And even most impressively, that's not on here. If you take a look at its earnings per share, it was expected to come in at 0.49. It came in at $3.21. It beat by 545%. And it's not here, but its free cash flows trailing 12 months is now $7 billion compared to last year's of $6 billion. I mean, its cash position is just increasing very nicely. The obvious drawback here is the future in which autonomous vehicles are going to be taking over. So what does that mean for Uber? But we already know they announced that they're working with Waymo and they're working with NVIDIA. So obviously, Uber with a ton of cash, I don't think that it's going to just sit aside and wait for the autonomous revolution to take over. It's going to be a part of it. So my bullishness on Uber is still pretty high, and I think that it's easy that we get back to all-time highs, but my near-term target is at $73 level. Now, if you're wondering what is a previous thesis that actually didn't work out, because all of those seem to have worked out pretty nicely or are working out pretty nicely, I did think that oil would actually break out of here. If you look at the 4-hour, I actually thought that oil would break out of here and continue up. We broke out, and then when the White House decided to postpone the tariffs against Mexico and Canada, two of our largest oil suppliers, right? We saw the price of oil decline due to that news. So this was one where the position had started to make money, but then once we broke below major support, I ended up closing that out for a loss. So this is one that hasn't panned out yet. I do think that there is going to be a long on oil soon, especially because we're in this weekly fair value gap, but I haven't yet taken another position. So just to be honest with you guys, that is one of the theses that I had before that hasn't panned out. All right, what stocks am I looking to get into? Okay, so this 360 level on Tesla, this was one that I was eyeing for a while. This is one that I've been eyeing for a month. We have the equal highs here, right? On the weekly, you can see that this was also a previous resistance level or supply level, and you can see that right now, that is where we're at currently. We broke and are retesting it as demand, right? Or as support. And then if you look on the daily, or rather the 4-hour, this is what I saw today, and I ended up day trading Tesla as well. But this wick right here, this is the earnings low. After hours on earnings on January 29th, Tesla wicked all the way down to 365.07, and we just swept that today. So right now, I'm looking at a bullish position on Tesla. And I think that in the midterm, I don't think that this is going to be bullish all the way through. I don't think we're going to get a violent bounce back to all-time highs very quickly, but a bullish bounce off of that 360-ish level. I bought calls on that, and I'm looking to ride it up to first that 370 level, as well as that potential 400 psychological barrier that will then close this air gap here. Now, on the exit side, when will I be out of this in case it doesn't work out? If it gets invalidated, below 360, I'll be out, and then I will likely look to take another position. If I get stopped out, I'll likely look to take another position at this level here in the 280s. I don't know if we get there, so I'm not saying that we're going to get there, but somewhere between 280 and 300 is where I would look to re-enter if I get stopped out of this position. And you guys know I don't really care about being stopped out. As long as I manage my risk, I'm going to find these levels and these trades are going to work out for me. So if a singular trade gets stopped out for 20% or whatever, it's not a big deal to me because I know that eventually when my thesis is correct and I'm patient and I keep to my risk management rules, that I will eventually make exponentially more money than the losers, which is the goal, right? So I'm holding calls here and I will close them below 360. I'll start to exit at around 370, 375, and 400 is my next level in the short term. In the midterm, I don't think that we could be that bullish on Tesla yet. It has a lot of promises to keep. It ran really hot. Right now, the market wants to see Tesla step up on its promises because its sales are actually pretty stagnant in terms of the cars, but we know that the story with Tesla is more than a car company. So we want to see updates on FSD, Robotaxi, and Optimus, all of which were promised this year. Updates were promised this year. So we want to see if Tesla can keep on those promises. And once it breaks this trend line, then we can start thinking about a more bullish momentum that is protracted. Now, these are the calls that I have in my public account, the March 7th 370 calls. I bought these today. They were up more, but I ended up averaging in buying another contract towards the end of the day. And speaking of public, and I'm sure you guys may have noticed, but I switched over to using public for my investing as well as my option swing trades and selling cash secured puts. It's a regulated broker based here in the US. Now, the reason that I like it over other trading and investing apps is because not only are the options trades commission free, there are no commissions or no contract fees for options trades, but you also get a rebate for stock and ETF options trades. The rebate means that options trades are not only free, but you also earn money. They are less than zero. Now, the rebate is based on your monthly trading volume, so the more you trade, the higher your rebate is per trade. And for any cash that I'm not using, I could just throw it into a high yield cash account that they have and earn 4.1% on my money. All right, NVIDIA to me was an absolute buy at the 200-day moving average. It doesn't often visit the 200-day. I told you guys this in a video. I ended up buying more shares at the 200-day moving average. I don't currently have an option here. NVIDIA has had a habit of once it hits the 200-day, it has had a habit of spending some time here, a few weeks here actually. So I'm being patient on NVIDIA, just scooping up shares on the cheap. Now, it obviously has suffered because of the DeepSeek news in the short term, which to me was an overreaction, not worth minus 17%. But for a stock that ran so hot, all it takes is one news story in order to push it over the edge temporarily. But the news there was that supposedly computing was becoming more efficient, so companies wouldn't need more chips. However, the funny thing is, we see this from the earnings. Microsoft, Meta, Google, as well as Amazon are all outspending estimates on AI CapEx. Their capital expenditures for AI have gone through the roof, and they said will continue to go through the roof. And that is why NVIDIA is recovering nicely here, because the idea that somehow more efficient compute means that the market, the total addressable market is now less instead of more is wacky. So that gave us a gift of NVIDIA in the low 1 teens, and now it is back to 128 as of the time of this recording. And for me, you can, if you wanted to, trade calls on NVIDIA to fill this gap potentially, but I'm happy with the shares I have, and I had a couple of monster positions, options positions on NVIDIA before. Not looking to open new ones here because to me, this level here is not a surefire rip to the upside. Same thing with Apple. I gave you guys Apple, the 200-day moving average. Apple went from 220 all the way up to actually 247, now trading around 232. But to me, this is a great buy for the long term at the 200-day moving average. Now, when we popped above and retested this gap here, I ended up buying the 225 calls, and we made about 30% on those. I still have one of those remaining, and I'll continue to hold that as long as we are above this gap here. I'll continue to hold those 225 calls because they do expire in a month. So I have quite a bit of time for these. And I want to see if there's any softened news on the China tariffs, just like we saw with Mexico and with Canada, because I think Apple will have a rally if that is the case. So to me, it's a pretty low risk hold here, but was happy to buy some shares for the long term at 220. And by the way, if you want access to all of my plays, I'm transparent about what I trade. I show you guys these videos all the time. But if you want real-time access and you want to get not only that, but the day trades, the long-term analysis, the swing trades, etc., link is in the description below. Come and join us. There's also an investment only tier for those of you that are more interested in long-term investments and not short-term trades. I made that a little bit more affordable for those of you that are not interested in the trading. I also trade live every single day at market open. So come join us. Click that link in the description. All right, AMD. As I said, I did not trust AMD at this trend line. Now, there are fundamental and technical reasons why I think AMD is actually expensive. I've gone over this in my videos, but if you look at AMD, for one, it's not even in the same stratosphere as NVIDIA, even though it's talked about for some reason by the public as them being competitors. AMD is not even a $200 billion market cap stock, and NVIDIA is almost at $3 trillion. So not even in the same stratosphere. NVIDIA is literally more than 10 times bigger than AMD. If you look at the PE ratio, you can see that AMD is rather expensive. However, because of this drop here, if you look at its forward ratio, now it's starting to look pretty attractive and pretty much on par with NVIDIA. Its revenue growth, however, is not very impressive compared to all of the other chip stocks that are not Qualcomm. Its net income 3-year CAGR is actually negative. So it does have some growing pains here. And I think the confusion from AMD lies for two reasons, right? The confusion or the shock is because of the price that it hit compared to where it's at now. And second, the conflation that AMD and NVIDIA are somehow competitors. AMD is more of a competitor with Intel and not a competitor with NVIDIA. However, there is room for this stock here. Now, I do like where it's at currently. We do have this weekly fair value gap that we did touch. So we are in this weekly fair value gap here. And if you look at the daily, I want you to take a look at this level. If you look at this level here, we had a lot of resistance, right? So a lot of support, a lot of resistance. This is how you start deriving your levels. And we are now below it and are trying to pop above it, but we are getting rejected here. So there is a chance that AMD gets rejected again at this resistance and comes back down to fill this gap, right? There is a chance that happens. But if AMD pops above, fills this gap, and retests this key resistance, then I will be interested in a long. So for now, I'm not interested in AMD. But if it does that, I will be very interested because this can be a momentum stock. However, currently it's trading even below the 500-day moving average. So the momentum is absolute dog crap. But once the momentum gets going, then I will be interested. And I need to see it at least close above this gap and retest this key resistance level before taking a long. Now, lastly, I want to talk about the VIX. We know that we are in a very volatile environment as it relates to tariffs and rates and data drops as it relates to the economy and GDP and yields, right? We are in a very, obviously the geopolitical stuff as it relates to 2025. This is a rather volatile year. And you can see all of the VIX spikes here happening since then, right? So what I would do is I would establish a normal hedge on my portfolio. Anytime that the VIX has these ranges every year, right? Some years the low is around 12. Some years the low is around 14. So if you take a look at 2023, for instance, right? VIX was routinely trading in the low 12s. And anytime it popped above that was an anomaly. If you look at 2022, the VIX was routinely trading in the 19s and even the 20s, right? Routinely trading at that in terms of the lows. And anything above that was an anomaly. So right now, it looks so far like this 14-15 area is the low for the VIX, the end of 2024 and the beginning of 2025. So I would routinely establish hedges on the VIX at the money. The problem with people, the reason that people lose money on the VIX is they'll usually buy something stupid like a $30 call or a 25 call or even a 20 call, right? You want to trade in the money options when it comes to the VIX, meaning if the VIX is at 14 and you're expecting a potential pop, you want to trade the 14 call on the VIX, right? You don't want to go totally out of the money. So I will routinely, and I already did this once this year, and I did it publicly for you guys, but I will routinely be buying VIX calls when we get to that 14, 15 level. Now, you don't want to hold these. The minute that these pop, you're going to sell them in the morning. You can then, on the flip side, short the VIX, but I would do it using UVIXI because UVIXI is an ultra short ETF. So the short movement is much more exponential when it starts to drop, right? It's a much better way to short the VIX than puts. So buying UVIXI puts when we get those pops is also something that you can do on the way down after selling your calls. Now, lastly, I will say that, as I've told you before, this is not the time to deploy all of your dry powder. Look at where we're at in this market cycle, okay? If we are going to have a downturn at some point this year or next, this right here is not the dip, right? You're going to see a big dip. The S&P 500, the SPY, potentially falling to 500, maybe even below. So once again, my suggestion is to be very strategic with your buys. Buy only blue chips at major levels, 200-day, 300-day moving averages. We've already seen a few of these. And if you haven't learned how to trade, 2025 is going to be a very difficult environment for you to try to learn, in my opinion. It is not 2023 or 2024 where things smoothly go up. We're going to see a lot of what we've already seen. It is a very challenging environment, even for experienced traders, to trade. And if you don't have your risk management on point, I would say good luck, because this is a market that can wipe you out. Even if the move itself isn't huge in a broad perspective, the intraday movements are so violent that if you have bigger positions than your risk tolerance and your budget dictate, then you can get wiped out. So be careful in 2025. Make sure that your position size more than ever is adequate towards your risk tolerance and your budget. The name of the game is to lose very little when you lose and try to maximize your wins when you win. It's not to have a 100% hit rate. I don't care about hit rate. I've told you this time and time again. I really don't care if I buy an option and it drops 20% below my level and I exit. I don't care. That's part of my risk management. That's what keeps me alive, right? Because when that plays from my exact levels, then I'm going to make a lot more. If you want to trade live with me every single day, link is in the description below. Also, get yourself a public account. There is no broker, in my opinion, like it right now, especially if you're looking for a commission-free broker. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.